ABC Listen. Podcasts, radio, news, music and more.
Hi, it's PK here from the podcast Politics Now. And as the politicians hit the streets this election campaign, we'll help you navigate the spin.
He said, sometimes I'll go into a press conference and I'll drop a little something that I know will annoy lefties.
And bring you the deeper analysis on what matters to you. It's called Politics Now, and you can find it on the ABC Listen app.
Stocks are falling sharply, the Australian dollar's in decline, and the scene looks set for a recession in the United States or even globally. Donald Trump's tariffs are reverberating around the world in a very bad way. So how is it looking for us, particularly given our biggest trading partner, China, is one of the hardest hit? Today, Chief Business Correspondent Ian Verrender on what to expect. I'm Sam Hawley on Gadigal land in Sydney. This is ABC News Daily. Ian, let's start at home. Australia's been hit with a 10% tariff across the board. So how will that affect our economy, do you think?
Not greatly at all, Sam. I mean, I think our exports to America, our total exports accounts for about 6% or something like that. We buy, some fairly large things from them, like aircraft and so forth. So for us to put tariffs on America would be a bit silly because we'd simply be paying more for the things that we can't buy anywhere else. But yeah, the 10% tariff on Australian goods really isn't going to affect the Australian economy very much if it was simply that in isolation.
Yeah, exactly. But it's not simply in isolation, is it? Because Donald Trump has slapped these tariffs on so many nations, including China, which is our biggest trading partner.
We're going to be charging a discounted reciprocal tariff of 34%. I think, in other words, they charge us, we charge them less. So how can anybody be upset?
He did that in his last term as well, didn't he?
He did, but not to the same extent that he's doing it now. This is everything that's coming into the States. I mean, last time around it was pretty much targeted specifically at China. This time around he's broadened that out to the rest of the world with a particular focus on China. So it's bizarre and it's incredibly damaging, as you can see. And I mean, what we're seeing at the moment is a stock market reaction to this.
Now this has to be the biggest fall, if not since COVID, then going back to the GFC. All sectors are down and it is what you would say a sea of red.
Stock markets do go up, they go down, they react wildly to certain things. There is something far more sinister in these movements, though, and that could flow through to the broader economy, to the real economy. Confidence is a very abstract kind of thing, but it's what economics, it's what human behaviour is really built upon. And once you smash confidence, once you smash somebody's faith in something, it's very difficult to rebuild.
All right, well, let's talk as well, Ian, in a moment about the poor old Australian dollar. But before we get there, the tariffs Trump has slapped on China since he's come back to the presidency all add up to 54%. It's massive.
Yeah. And where does America get most of its manufactured goods from? China. So they're going to be paying a lot more for the goods that they need. It's a very fraught road that he's taking the country down at the moment.
Yeah, apparently the Americans imported something like $127 billion worth of electronic equipment from China last year in 2024. So it's a lot. There's a lot of TVs and smartphones and all sorts of goodies going into America from China at the moment.
And it's not just that. It's not just finished products. It's components for manufacturing as well. And, the car industry is a great example of how integrated supply chains become, because one component can cross a border 7 times during the course of a car being built. And so the tariffs that are being put on that are simply going to make the cost of production in America extraordinarily expensive, because if you were a huge manufacturer, whether it be cars or anything else, you're not going to just close down your multi-billion-dollar plant in Mexico and shift it all to America because Donald Trump's the president. You'd probably sit there and think, he might only be in for one term. Let's see if we can ride this pain out, and then we'll make a decision after that.
All right, Ian, so now let's turn to what these tariffs mean for the Chinese economy, and then, of course, what that in turn will mean for us. China's economy has already been suffering through a pretty severe downturn, hasn't it?
It has, yeah. I mean, the price of a lot of their goods has been declining, and that's primarily because demand has fallen off in a huge fashion because consumers don't have really much money. A lot of people in China have lost a lot of money through property and property investment, and as a result of that, people have stopped spending, and because they've stopped spending, prices have fallen. And you might think, well, falling prices, I mean, how good is that? But what that does is if you're a consumer and you want to buy a washing machine or something, and you think, oh, this is how much it's going to cost, I won't buy it now because next month it's probably going to be cheaper. Manufacturers don't sell anything, and as a result of that, you know, the economy slows down, and you end up in a lot of trouble, which is where China is at the moment.
So then bring in the tariffs. Will that make things worse? What are the predictions for the Chinese economy in terms of these tariffs?
I don't think anybody's had a chance to model anything about what might happen in the future, because a lot of this has been predicated on the idea that Donald Trump will come in and bluster around a bit and maybe slap a bit of a tariff on, and then he'll take it off, and then it'll all be talk and no action. And this time around, it seems as though he is going to follow through on it. These kind of actions have a lot of consequences that nobody thinks of to start with. And so, okay, if China's economy really does tank, well, where does that leave America?
Yeah, and the thing is, China has also retaliated, right? So that will raise the costs for producers in China, right? So what's the flow-on effect from that?
Well, it's not just the tariffs that China's retaliated with, because they've been very smart in their retaliation in some ways. They've also restricted the export of really key materials, and particularly not just rare earths, refined rare earths, but also the magnets that are required for really high-end uses in robotics, in armaments and military applications, and for technology generally. Here is America that's built its future on technology, and it's just essentially cut off a significant input that it needs to do that. And bear in mind that these kind of materials, China is the sole manufacturer. So this is going to have potentially a devastating impact on a lot of America's technological revolution.
The thing is, the warnings for the US economy are pretty dire at this point, because America isn't actually making all of those things that it wants to slap these massive tariffs on.
Yeah. Industry won't just start up in America automatically. In the intervening period, you're going to have price rises for components, for basic items, tools, machinery that Americans need and use. The prices for those will go up. So you're going to have inflation reigniting in America. And look, everyone is now pretty much resigned to the fact that the American economy is facing a rather rapid downturn at the moment. The US Federal Reserve of Atlanta's latest numbers are predicting a decline in first quarter performance. We're talking about negative 4%, 3.754%. That's for the March quarter. If you get 2 quarters of that, that's a recession. And I think JP Morgan is saying 60% chance of recession. So we're talking about a slowdown in the US economy, a recession plus inflation. And that is a diabolical kind of situation to be in.
All right. So, Ian, let's turn now to what this huge pressure on the Chinese economy, these tariffs, the pressure on the global economy means for us. Because as you mentioned, the 10% across the board tariff that has been applied to Australia isn't too big a deal. But put it all together and it's not great. Even the Treasurer, Jim Chalmers, is really warning of the impacts of this.
And what our modelling shows is that we expect there to be big hits to American growth and Chinese growth and a spike in American inflation as well. We expect more manageable impacts on the Australian economy, but we still do expect Australian GDP to take a hit, and we expect there to be an impact on prices here as well.
That's right. Look, we're a fairly small nation, in terms of population and where we sit in the world, but we are one of the world's biggest trading nations. But because we rely so heavily on international trade, a downturn in the global economy has a major flow through to Australia. And, we're already seeing that with the drop in the Australian dollar just in the past few days. Now, it's dropped against the US dollar. On Monday, we dropped below 60 cents, so into the 59s area. But that's not the worst of it, because the US dollar is in free fall at the moment. Yeah. So we're declining against a seriously declining US dollar. If you look at our movement against the euro, it is just mind-boggling. We've dropped heavily against the yen. We're dropping against the pound. We're dropping against every other nation at a much faster rate than we are against the US dollar. And so that gives you an indication of where the pain is being, I guess, exerted for Australia. In a lot of ways, though, a falling dollar, it's almost like a shock absorber, an economic shock absorber, because what it does is that it does protect your economy to a certain extent, because it makes your exports cheaper automatically. So other countries around the world can suddenly afford to buy more Australian materials because our dollar is weaker. It can get to a point, though, where if it drops too heavily, it becomes inflationary because we have to pay more to buy things from elsewhere.
I was going to say, what does this mean for inflation and interest rates here? There's sort of talk that we could have more rate cuts more quickly.
Yeah, I think that's probably likely. I mean, we were already very likely to have an interest rate cut in May. So that would be something that the Reserve Bank would probably do just to instill a little bit of confidence. Inflation does seem to be back into that target band and under control. But, we are entering some pretty uncharted waters, really.
Just tell me then, how long do we need to wait to see the full impact of all of this? Is it days? Is it weeks, months?
Well, if you think back to the unwinding of all the trade barriers that we had post-World War II, it took pretty much half a century to get to where we are now.
That's a long way.
Yeah, so these things do play out over a very, very long period of time. And look, you could argue that unwinding of trade barriers, it didn't work out the way all the big economists said it would. Everybody was going to be fabulously rich as a result of this. You saw a massive increase in inequality in developed nations, and that really ran right through the US economy particularly. That's why those towns are called the Rust Belt, because they once had quite vibrant and profitable industries, and they no longer do. And so you've got a lot of the population there that are very discontented, to say the least. And this is what's resulted in the election of Donald Trump, this populist leader. There are legitimate concerns about what took place and how those changes were implemented. But to suddenly shift back and to think that you're going to recreate the past overnight, I think that's a really deluded kind of way of thinking. If you just consider, if you were a manufacturer and you thought, right, I've got to move my operations from China back to America, back home, and I'm going to do what we used to do, would you build the same factory that your company had 50 years ago? Would it be the same design? Employ the same number of people? Probably not. It would probably be full of robotics and be a high-tech kind of operation,
Yeah, and I guess really, Ian, we're all waiting to see if Trump will blink.
Well, even if he doesn't, what he's done with the last few months is just destroyed any notion of reasonableness. There's been no sit-down global conference, let's renegotiate these terms, we're going to, this is where we're looking at going. It's this chaotic we're doing this, we'll back away for a bit. No, we're going to do it now. Then there's another backflip. I mean, it's been incredible to watch, really has. But, as I said to start with, this is something that has really destroyed faith, trust and confidence amongst investors.
Ian Verrender is the ABC's chief business correspondent. This episode was produced by Sydney Peed. Audio production by Adair Shepherd. Our supervising producer is David Cody. I'm Sam Hawley. To get in touch with the team, please email us on ABC News Daily at abc.net.au. Thanks for listening.